Hello. Good afternoon, everyone. We'd like to welcome you onto this 2021 budget overview webinar this afternoon. It's great to have everybody on board. We've had a really good response to this webinar. I think we've had around about 300 attendees register for this event. So it's great to host you all this afternoon. If anyone's got any technical issues or wants to get in touch with us during the webinar, feel free to contact us using the chat function and we'll be available to help there. So my name's Carl Taylor from Oldfield. And also on the panel this afternoon, we've got Joe Brewer, who's a partner here at Oldfield. Hello, Joe.
Hello, Carl. Hello, all.
We've also got Jerry Surtees, who is Chartered Tax Advisor here at Oldfield. Hello, Jerry.
Afternoon, all.
We've got Angus Brewer, ATT. Hello, Angus.
Hello, all.
We've also got Jack Bennett, who also works on our tax team. Hello, Jack.
Good to be on.
Good. So, I think there's been a huge amount of speculation surrounding this budget that's happened this afternoon. I think perhaps more than any other budget than many can remember. And I think really the main reason for that is that, the Chancellor has had a somewhat delicate situation that he's had to, that he finds himself in. He's having to grapple with how to rein in a record deficit. At the same time, he doesn't want to impede the UK's recovery from a recession that's been caused by the pandemic. But the speculation is over now, and we've got some actual announcements from today's budget to fill you in on this afternoon. So I'm going to go around the panel to get them to give you the key headlines that you really need to know as a result of the budget this afternoon. So we're going to start with you, Joe. What are the big announcements on the COVID support for businesses and the public finances overall?
Well, Carl, firstly, I'm really impressed with the incredibly generous level of support this government has provided as a result of COVID. This now totals an amazing £407 billion worth of support for individuals and businesses in the UK. That's quite an incredible number, I think. As a result of this support, it means that there's less unemployment than was forecasted, and also a faster rate of economic recovery is predicted, obviously due to those really generous support packages. Just on to the specific measures of further support announced by the Chancellor today. Firstly, the furlough scheme that we'll be familiar with. That's been extended until the end of September. And if you remember, that works at 80% of the salary paid to the employee. Employers will have to chip in with a 10% contribution in July and 20% in August and September. But let's hope it's not needed by then. The self-employment support scheme is also extended until the end of September, and for the first time includes those who started a business more recently, so more included in that. It's a similar package to before, but there will be reduced grants for those who are less severely affected, so those whose turnover is reduced by less than 30% due to COVID will have reduced grants available to them. There's a new Help to Grow grant, which provides 90% funding for management training for small businesses. And there's also an interesting 50% discount voucher for qualifying software for use in your business. So that's worth up to £5,000 each for small businesses. The criteria seem to be as long as you employ between 5 and 249 employees and your business is registered at Companies House. If you've been trading for more than 12 months, and obviously it's only the voucher is available for software purchased obviously for the first time. There's also something called a Restart grant, and that's a one-off cash grant for those in the retail and hospitality and leisure sectors only. so it doesn't apply to everyone. However, that's worth £6,000 for retail and £18,000 for the hospitality and leisure sectors. That's a one-off cash grant, and along with that, there's continued business rates relief and VAT breaks in those sectors as well. So a lot of support really in the retail, hospitality and leisure sectors. Quite a lot of other measures. We can't cover them all now, but one that is notable to mention is a further incentive of £3,000 to take on any apprentice for the first time. So that's an incentive to employ people as an apprentice for the first time. That's all from me, Carl. Thank you.
Okay, Joe, so there's quite a range of continued support for businesses here, continuing over the next 6 months, a lot of it extended until the end of September. But turning to the other tax-related announcements, Jerry, what were the significant takeaways for you?
Yeah, well, I guess to start with the big announcement that wasn't made, it was very welcome to see, and a bit of a surprise in a way, that despite the rumours ahead of the budget, there are actually no changes, as far as we can see, planned for capital gains tax, and that includes entrepreneurs relief, or business asset disposal relief as it's now called, which means that we can continue to benefit from the current favourable tax rates and reliefs, including the 12,300 per individual per tax year that you get tax free on capital gains tax. So that's really useful, and that's going to continue. I mean, I think the interesting thing is that capital gains tax was actually conspicuous by its absence from the budget speech. Well, and what do we take from this? Well, I think it's probably fair to say that we kind of suspect that there's probably going to be some more changes on the horizon. This is not going to be the last we hear about capital gains tax. So we do want to encourage everyone that's on the call to not to be slow in taking advantage of what's available, because it might not be available in the future. We've obviously talked in the past on past events about different ways of doing that, and we will continue to do so for future events as well. There was also mentioned a consultation on enterprise management incentives, or EMI as it's known, which is a popular form of employee share scheme, and some very attractive tax benefits around that particular scheme. And I think the idea is that they want to make it more usable and accessible for particularly employers in the sort of SME sector to recruit and retain talent coming out of the economic situation, which I think is welcome news, because whilst the scheme is very attractive, it does have certain downsides, particularly for smaller companies, and also those without short-term exit strategies. In other words, they're not thinking of selling their business in the next few years necessarily. So we are planning to submit a response to the consultation, the government consultation, and it'll be interesting to see what comes out of this. Finally, the Chancellor announced the creation of a number of free ports, as so-called, across the UK, as a way of balancing up the country and boosting kind of struggling regions of the UK. I think these have already been announced for England, with further to be announced elsewhere in the UK. And these will become operational from later this year. And I think the significant thing about these is there's some significant tax perks to operating in these regions, including a 10% annual allowance on construction of commercial new build property, 100% deduction for tax purposes for all plant and machinery, full SDLT, stamp duty land tax relief for commercial property, full business rates relief, and also relief from employers' national insurance as well. There's some more detail to follow on this. The government will be releasing more details shortly, but it's obviously pretty attractive, and certainly look out for more details on this and think about opportunities to either locate or relocate businesses in these regions to take advantage of these reliefs. I think they're going to last for 5 years. So worth thinking about. I think that's all from me for now, Carl.
That's great. This is some really interesting stuff there, Jerry. I had some key announcements to mention about corporation tax. I think running up to this budget, there was some speculation about corporation tax possibly increasing. And it does seem like corporation tax is going to increase. I think, the Chancellor announced this as the big headline way that the government is going to recover revenues to reduce the deficit as we move forward and recover from COVID. But it's not going to happen for a couple of years. The Chancellor's giving us plenty of notice on this, and I think that's really because he's wanting to allow some time for recovery in the economy before implementing these increases in corporation tax. So a quick overview on this. From April 2023 onwards, corporation tax rates are going to be increased from 19%, where they are at the moment, to 25% overall. But then there's going to be a small profits rate, which will mean companies with profits of up to £50,000, they'll just continue to pay 19% as they are currently. So what that means is that a lot of very small companies will actually be unaffected by this change in corporation tax rates. And then there will be a tapered rate that will be introduced for companies that have got profits between 50,000 and 250,000. But if you've got profits of 250,000 or above, then you're going to be paying the new rate of 25% from April 2023 onwards. Alongside this, the Chancellor did announce a new super deduction. So this was interesting. This caught our interest when he announced that this afternoon. And what it is from the 1st of April 2021, so that's just under a month's time, this new super deduction is going to come into effect, and it's going to last for 2 years. And what it means is that companies that invest in qualifying new plant and machinery assets will be able to get an enhanced deduction, so a 130% first year allowance, which means you can reduce your tax bill by up to 25% of any spend on qualifying plant and equipment under this allowance. So just take an example. Say you spend £100,000 on a new machine. Well, at the moment, that would reduce your tax bill by £19,000. But under this new deduction, it will actually reduce your tax bill by £25,000 in the year that you've invested in that equipment. So it is a really useful allowance, and it's a great opportunity for those that have built up significant cash reserves throughout this period. It's a great opportunity for those people to invest in plant and equipment, get this enhanced tax deduction. But just a little point to note on it, that this super deduction won't apply to used or second-hand assets. But we've still got the annual investment allowance, which gives us a 100% tax deduction for second-hand equipment that we buy, up to a limit of £1 million. And that sort of limit of £1 million is staying at least until the end of 2021, as far as we know. And also, just quickly to wrap up on this, there was an announcement of a consultation on R&D tax reliefs. There's no changes yet, but kind of judging by the questions that are on that consultation, that there may well be some fairly significant changes in that area, but we'll keep a sharp eye out for those changes. As I say, it's just in consultation stage yet at this point in time. So, Jack, what were the key announcements that you took away from today's budget?
Yeah, it's good. I think it was quite interesting to watch the debate in the run-up to the budget as to whether the Chancellor would extend the temporary cut to stamp duty land tax. And he did confirm that that would be the case. So currently, anyone buying a residential property up to a value of £500,000 will not pay any stamp duty land tax. And he has extended that now to the 30th of June. So as long as you complete before then, you won't pay tax. And also, he's gone even further, and he said that from the 1st of July to the 30th of September, that nil rate band will be £250,000. And then from 1st of October onwards, the government are expecting it's reduced back down to the normal levels, which is £125,000. So that was quite an interesting debate to follow beforehand, but he has extended that, which is good. And while we're on the subject of purchasing houses, the Chancellor also announced his new mortgage guarantee scheme. So in order to further help people get onto the housing market, I think it's quite a key priority of the current government. They're offering guarantees to lenders who will give mortgages to those that can only fund a 5% deposit, and that's on houses worth up to £600,000. And so that applies to any new mortgages between 1st of April 2021 and 31st of December 2022. So it's quite a long period as well. And he did also confirm that several of the larger banks in this country have already agreed to go ahead and offer these from next month. And the other key announcement regarding loans was the new recovery loan scheme, which starts from 6th of April. And that is aimed to provide lenders with confidence to lend more money to businesses. And the way they're doing this is that the government will offer an 80% guarantee on eligible loans between £25,000 and £10 million. So this is aimed at the businesses, and it's just interesting to note that this is expected to be available for businesses who have already taken advantage of the other guaranteed loan schemes, so bounce back loans and the C-bills. But they're really key for me, Carl.
Yeah, that's good. It's really interesting just to see that extension of the stamp duty holiday there. There was a bit of speculation about that, and it has actually happened. It is happening. So we've got that extension there, which is going to be useful, no doubt, for some. And that support there, continued support in the way of government-backed loans for businesses, but not only for businesses, we've got this sort of being extended to individuals here with this mortgage guarantee scheme, which is interesting. But finally, Angus, what were your key takeaways from the Chancellor's announcements today?
Yeah, well, I was really looking out for some changes on the personal tax aspects, just to see what was going to be announced on there. There's actually very little coming out relating to personal tax, so there's not too much to report on that front. I guess a couple of points to cover off on it. The personal allowances and the higher rate tax threshold are both increasing very slightly just by inflation amounts, and then they'll be frozen until 2026. So I won't see any changes in the personal allowances or higher rate tax thresholds until then. There's been no changes hinted at from a dividend allowances or dividend tax rates. So that's all the same for now. Inheritance tax, there's not really any change. They were going to index link the thresholds, previously announced that, but they're not going to do that anymore. So all their thresholds will be exactly the same as they currently are. And on pensions as well, again, there's no real changes that came in there. So that's about all it was really from a personal aspect. But just a few other points from a business point of view for everyone's interest. Just quickly mention SSP, the statutory sick pay. The government launched that last year to support that, and that's continuing for the time being. And then there's business rates relief. So for businesses in the retail and hospitality and leisure industry, they will continue to have 100% business rates relief through to June. And then that will be followed by a 2/3 reduction in business rates through to March next year. So some quite generous rates relief for those hard hit sectors there. There's been some more flexibility in terms of businesses making a loss and being able to relieve those in a flexible way. And then for the home office expenses and the employers reimbursing those, there's been extension of the income tax and national insurance exemptions on that. So other than that, I think that's really a few of my points. As I say, I was most interested in seeing what the changes are going to be from a personal tax and pensions, but long and short of it, there wasn't really too much in the way of changes. And that, I think the main focus of this budget was on the business tax. Carl?
Thanks, Angus. Yeah, I agree with that. Really the kind of main changes here as a result of this budget have really been on the corporation tax front. And that said, that's not going to happen until April 2023. But thanks, Angus, for those points, and thank you, panel, for all those points. Hopefully that's really helped to end some of the speculation that has kind of been snowballing up to this point. Hopefully that's helped to clarify in your mind what the key announcements are from today's budget that you need to take away and think about. These are really only our initial thoughts on the headline announcements. There's obviously a fair bit of detail behind all these announcements, and there's other points too that we haven't mentioned that are important, but just not quite so significant as the ones we've talked about today. So all of that will be available in our budget summary publication, which will be coming around by email first thing tomorrow morning. And just before we close, we just wanted to mention that we have got another event coming up around succession planning. Angus, can you just give us a bit of details, just fill us in a bit more of the detail on that?
Yeah, certainly, Carl. So I think this does actually come off the back of some of the points that Jerry mentioned earlier about capital gains tax changes and or the lack of capital gains tax changes and inheritance tax. So as we said, there's no real changes here this time, but we must take a look right now at what we can do to take advantage of the current situation. We can't just accept the status quo and leave it untouched. And these areas have a direct link to succession planning. So succession planning for business is absolutely critical and can prove a real problem for many family businesses. So we're hosting a live online event on Thursday, the 15th of April, where we can, our consultants will provide insights on the important aspects of business ownership and succession. And I guess there's lots of angles to this, but we'll be focusing on the practical aspects of owning a business and the generations involved, the key tax considerations and opportunities, and also linking with that is inheritance tax and estate planning. I'll also have a guest speaker on this event. More detail will be released on that soon. But you'll receive a follow-up email after this event, and on that email there will be a link to register for the next event on the succession planning on Thursday, the 15th of April. So watch out for that and register now.
Thanks very much, Angus. And thank you everyone very much for joining us this afternoon. It's been great to have you on board, and we look forward to catching up with you again soon. Thank you very much.
Thank you all.
Thank you.